So do I have any questions from the audience on R&D tax at this stage?
Would a normal accountant know all this?
No.
Okay. My experience was not.
No. Look, okay, let me explain the landscape. Under the R&D tax incentive, the government since 11/12 made us consultants be registered R&D tax agents. So we specialise in R&D. We've got, because there's a need to understand the technical side as well as do the numbers, the sort of people that we employ are either PhDs with different disciplines who do the technical project writing and CPAs. The CPAs have all been doing R&D tax for many, many years. It's a specialty. 99% of external accountants know nothing about the R&D tax incentive. And they even do things like, for instance, the benefit comes in the form of a non-assessable income because it is a tax offset. So whilst it's valued at 45 cents in the dollar on your expenditure, it's actually worth a lot more because it's tax-free money. So it's like getting a frank dividend, right? We see accountants actually putting it in as a grant and then paying tax on it. I mean, that's how far away they are from understanding the R&D tax incentive. They do end up receiving the R&D tax schedule that we provide them to impute into the tax return, and that's the only role they play. So unless they do a lot of R&D claims every year, they're not around it. You've got to be doing, we do about 200 claims a year, this is what we specialise in. So we see it all, and we understand all sides of it and how some of the rules can come into play. There's a lot of small rules that you've got to be aware of. Like for instance, if someone comes, I was just talking to a gentleman outside who was doing his own R&D tax claim. Is he in the room? No, he's not. He is developing, a client came to him to ask him to develop a device. He felt confident that he could develop that device, and he entered into an arrangement whereby they would be providing him with a 25% drawdown when he hit certain milestones. And I said to him, okay, was that contract entered into before you started the R&D? He said, pretty much. And I said, well, you don't really have any financial risk to claim against technical risk because you're actually getting paid as you go. So what you should be doing is you should be developing the product, taking all the financial risk, receiving the benefit, and then selling the product at the end. But if you've got a fixed price contract in place at the front end, the only claim that you can really make is if the R&D cost you more than what you're receiving in money. That's your financial risk. So if it costs you 150 grand and you sold the product for 100, you can only claim the 50. So he's doing his own claim. He doesn't know about all these other rules. And we do find that Oz Industry run courses for people to come and do their own claims. And then I go out and speak to these people, offer them a free health check, and then find that they're all making lots of mistakes. So I wouldn't advise doing your own claim, and I wouldn't advise doing it with an accountant who will say he can do it because it's tax, but he doesn't want you to go anywhere else. And he'll know nothing about it, and he'll minimise your claim, or he'll let you down, he will give you the wrong advice, right? So it's very specialised.
Is it likely that this law will change?
Sorry?
Is it likely that this incentive law will change?
Okay, the government tinkers and changes programs all the time.
Yeah.
Only in the last week did they try to reduce the benefit from 45 cents to 43.5. It was announced in the last May budget, but luckily the opposition parties squashed that one. I think Palmer had a lot to do with it. They were also trying to kill off the large companies with turnover over 2 billion and make them ineligible. But what they've done is they've just capped the expenditure at 100 million a year, and the benefit will stay at 45 cents on the dollar or 15 or 10 until the tax rate drops in the following year for some companies to 28.5. So the resultant benefit will drop to 43.5 because it's the tax rate plus the 15 cents, if you like. So yes, the government wants to start spending money. Look, at the moment there's 13,000 companies claiming. The government's recognised there should be 20,000 companies claiming. The other 7,000 either don't know about it, are unsure, haven't had time to deal with it, a whole raft of reasons, or have got the right or wrong entity structure. They might be set up, like I come across companies that set up as trusts all the time. Their accountant tells them they should be a trust, And then that eliminates them from being eligible under the R&D tax incentive, right?
So you have to be proprietary limited.
PTY Ltd or LTD.
How often can you apply for it? Is it something you can apply for every year if you're eligible?
Yeah, you can apply for it till it's a
There's no
scheme.
limit on the lifetime?
No, every year.
It's a new funding?
Yeah, there's been an R&D tax incentive scheme in Australia for 35 years now. It's one of the only things that's WTO friendly, where all governments around the world can incentivise companies to do R&D in their country, and it's not something that's contested by other countries. Many countries in the world have got exactly the same scheme. In fact, we ripped it off. England, Canada, Singapore, Ireland, they've got exactly the same program, and they've got different percentages that they pay out. I think that the English one's the most, that pays out the most. I heard it was 230% return, which I haven't checked, but that's what I was told. In some countries, it's 70 cents in the dollar rather than 45. Yeah. And yes, the government will continue to tinker with the eligibility criteria if they find that it's too loose. They'll tinker with the benefit if they're spending too much money. And or they might sharpen up on what they consider to be eligible software development, because it's moving so fast that a lot of people can't get their head around it in the first place, especially at Oz Industry where they administer the scheme. So yeah, there's potential for the government to change things, not to kill the program, but just to tinker with it from time to time. Yeah, yeah.
I know I shouldn't be questioning the logic here of some of the rules, but
Yeah, you can.
the 40% you mentioned to a high wealth individual or investor.
Yeah.
Now, what is the logic behind that? And is it 40% owned by one investor who then is classified and owns a whole bunch of other assets that falls in? But even if let's say for argument's sake, I still own 60%, and I bring in an investor for 40%,
Okay.
I'm ineligible?
No, you're right. Okay, what I mean is that the major shareholder's got the controlling interest, who has a minimum of 40%. So if you've got 60, and the other guy who's the high wealth is 40, you're fine, because you don't own any other companies that have got 20 million turnover to be aggregated.
Oh yeah.
But say you had the major shareholder who was a major investor who owned many companies, and he was the major shareholder that had 40% or more, and you had 39 and other people had 10 and 11, well then it would be aggregated, because he's now the major shareholder, and the company would be ineligible to claim the refundable tax offset.
It's pretty good logic, actually. I like that.
Yeah. So it basically follows the small business rules of aggregation under the program. And now when I talk about the person, they look behind the entity as the shareholder, and who is the resultant person. So and even if they put their brother or their husband or their wife or whatever in there, that's still the same person. They look through family connections, they look through entities, and it also includes any company around the world. And we're supposed to list them on the schedule when we're lodging a claim as to what those connections are if this rule comes into play.
Okay.
Yeah, so it's totally transparent to everybody. Okay, now the other change to the current scheme compared to the prior one didn't allow foreign-owned companies to make claims. The current scheme does. So if a foreign company decides to set up a company in Australia fully owned by them, and they undertake R&D in Australia, they can make a claim just like any other Australian company. That is a major change, and that is the reason for that is to entice foreign companies to come to Australia to do their R&D, quite simply. Right, look, if you're subcontracting R&D, the other thing is that you've got to be the one that owns or controls the IP and controls the conduct of the R&D activities. So it's you taking the financial risk against the technical risk, so you will end up owning the IP. The IP doesn't need to be owned by the claimant entity as long as it's owned by you personally or by another entity that's connected. Okay, now the other change to the current scheme compared to the prior one didn't allow foreign-owned companies to make claims. The current scheme does. So if a foreign company decides to set up a company in Australia fully owned by them, and they undertake R&D in Australia, they can make a claim just like any other Australian company. That is a major change, and that is the reason for that is to entice foreign companies to come to Australia to do their R&D, quite simply. Right. Look, if you're subcontracting R&D, the other thing is that you've got to be the one that owns or controls the IP and controls the conduct of the R&D activities. So it's you taking the financial risk against the technical risk, so you will end up owning the IP. The IP doesn't need to be owned by the claimant entity as long as it's owned by you personally or by another entity that's connected, that's fine, okay? Similarly, if you are contracting the R&D out, you've got to do that under an agreement which specifies that you own the IP, and you need people to record the conduct of the R&D using the scientific method, so recording what the failures are. I mean, R&D, it's R&D because there's potential for failure and there's technical failures along the way. It's got to be directed at a technical advancement or a scientific advancement. It's not about claiming business development costs, right? It's not about claiming startup costs to register your entity. It doesn't cover claiming patents either. A lot of people think that because patenting is a big part of R&D, but it doesn't cover the claiming of, the expense of doing your patents. It's still arguable with Oz industry whether the first stage of the patenting, the search stage, is eligible. We often claim it, and we're having debates with Oz industry on the eligibility. The ADO are quite happy to pay on it in terms of the numbers, but Oz industry aren't happy about the activity. So I've just got to explain, this is administered by two government departments. One is Oz industry on the technical side to eligibility, and on the other side it's the ATO on the numbers. They even clash amongst each other as to what they believe is eligible. Like patenting, Oz industry say it's not eligible, the ATO say it is. But unless you can get the activity registered first, you can't claim the expense. So there's a bit of a dilemma there.
Nothing. I was just going to say, without a patent, you can't do research and development if you're not going to.
Yeah, well that's a cost. Some of these costs have to be paid for by you.
Yeah.
And now what I'm going to do is try to give you a different, more hands-on perspective as to the way things normally progress, and this is the way you should see the programs in their hierarchy. You undertake development and you claim it under the R&D tax incentive, and I'm going to presume that you're in tax loss and you're a startup, or you're going to generate tax losses. You're going to get 45 cents in the dollar back, and it's non-assessable income. Or you're going to get 15 cents if you're in profit, right? So I'm basing it that you guys are all under $20 million, which I would tend to think would be what the room would be. So this activity might go on for, look, generally R&D projects go for 2 to 3 years. That's what we generally find. Doesn't matter what industry it is. You then get to the point where you've got a working prototype. And if the ones that were in the room prior to see Topaz speak, at the end of the session she was talking about the Accelerating Commercialisation Program. This is where you can get matching funding on a competitive basis, one-to-one, up to $1 million through the Entrepreneur Infrastructure Program, and the subset of that program is Accelerating Commercialisation. You can still be doing R&D through the commercialisation process. Now here you get 50 cents of the dollar, as you can see, but any activities that are claimable under the Accelerating Commercialisation that are still claimable under R&D, you can claim both, you can double dip. There's a clawback provision of 10% when you do so. So effectively you're now getting 35% for the same activities as what you're doing under Accelerating Commercialisation. Some activities lap over. You're getting 35 under the R&D for those activities and 50 cent there, so 85% from the government. The accelerating commercialisation is a grant, so that's taxable income, which will reduce your tax losses. Where this is, all expenses. This is a non-assessable income. This is a grant, and that comes in as income. Now, when you're to the point where you're ready to commercialise, quite often you need to not only sell in the local market, you're going to go off to the export market. Again, you can get 50 cents in the dollar, reimbursed in the same way you get under R&D. You claim it annually, and you've only got 8 years in which to claim an EMDG grant. For the first 3 years, you don't need any export sales. So suddenly we've got the government reimbursing 45 cents for doing your R&D. If you've got a good product and you happen to competitively win a grant here, you've now got the government paying for 50 cents in the dollar at this stage, some of which you can double dip and get another 35% on under R&D. And then you've got a product that you're now taking to market, and you are marketing product, not selling. We're talking about marketing, trade shows, going out and seeing potential agents and distributors. So now you're getting a 50 cent reimbursement. So suddenly these two programs are entitlement programs. That's a competitive one, as you can see, and that's an entitlement program as well. So if you're undertaking the activities and you've got the resultant expenditure being incurred throughout the financial year, you are then able to come to us. We would be doing the claims, because that would give us the due diligence on the timing and the costs and everything. And if your company is in growth stage and doesn't have any things in the cupboard, if you like, we can actually provide you a prepayment against your EMDG grant and against your resultant R&D tax benefit. So rather than waiting till next financial year to lodge claims and wait for the ATO and Austrade to come and audit you and pay you the money, we can pay you as you go. So as an example, in this financial year from July to the end of February, if someone came to me and we had eligible R&D, eligible expenditure, say 200 grand, they're eligible to get a 90 grand refund, we can give you 80% of that $90,000, $72,000. That then means you don't need to go and raise equity, you've got better, more cash flow, you can either do more R&D, spend more money, get a larger refund, or you can use the money to pay for some of the expenses that you need to pay for by June to make them eligible. By using some of the strategies that I mentioned, like paying wages or tax and so forth. In other words, you don't need, well, we've got many companies doing this with us already. They said it's the cheapest form of finance because not having to give away equity, and it means that with the money that we're providing them, they can get to the next milestone, which is announceable before they do their next capital raise, and they can get a better capital raise out of it. Right? So we're talking about cash flow funding by using the resultant grant as a security to raise money as you go, so you don't have to go to the market to raise equity when you're not ready to. In fact, and you don't have to go and spend 9 months pitching at the same time and wasting your time. You want to be ready and able to go to an investor with something that is tangible, even possibly a through line into marketing. Into the, where's the product going to go? I've got a market for it, I've already got distributors, I've already people asking for this product, and I've already determined even a price. So therefore the through line is there for an investor to come in feeling very confident, which means that you can sell off less percentage for a higher price and get where you want to go. That's pretty much my rundown, I think, because I've done my 45 minutes. Have I got any more questions in the room?
The auditing process, do they audit, so
Okay.
received R&D?
R&D is a self-assessment scheme. So when your number comes up and they give you a review or a visit. You may not get it the first year, it may take 5 years to get it, and it can occur at any time from the Oz industry or the ATO.
So 5 years from when you
First claimed.
Okay.
It could be 3 years, it could be 5 years, it could be the first year. We never know. It's, yeah,
So if you're looking to get an R&D each year,
yeah.
do they look at the previous year?
Yeah.
So you could be, it's an install, but you're thinking in your own mind it's like an installment.
When we put a project in, we have to tell them what the timeline of the project is. Like it's going to go for 3 years, and what the overall project expenditure is going to be. Let's say $800,000 over 4 years. So they know that you're claiming year by the year, and we have to claim by activity. It's not a project-based scheme, it's an activity-based scheme. So we need to break down the project into activities, which are the normal activities that occur, like concept generation, research, this is my hypothesis, this is my experiment, this is me undertaking the experiment, evaluating the experiment, testing it and starting all over again, blah, blah, blah. It goes around in circles. So they want you to break down it by activity, and that's the approach of the scheme. Yeah. And then the costs relate to those activities as well, you know. Yeah.
And if you fail your audit, do they actually ask you to repay?
Yes, if you are found to be ineligible or claiming ineligible expenses, or you didn't really have the tax, well, if there's something, there's a miss, yes, the ADO will want the money back, and there's penalties involved. The normal tax penalties that apply from 25% up to something like 75% if they find it as fraud or whatever.
Yeah, sure.
We've never had one happen to us yet, but you know, that's why they've made the consultants R&D tax agents, so we're the front line, if you like, under a self-assessment scheme, that we don't obviously put things in that shouldn't be put in the first place. And we also help people set up their record-keeping systems. We help writing with the projects and breaking them up into activities and so forth and so on. But the normal sort of things that you'd want to keep to substantiate what you're doing, you should have on file most of the time, except the weekly timesheets. You need to do weekly timesheets on the people doing the R&D against the activities. That's, otherwise you don't know. The largest cost with R&D is labour.
Yeah.
So you've got to substantiate what percentage of time. Now, people come to say to me, I work 80 hours a week, I get paid for 40 hours, therefore I'm doing R&D for 40 hours, I'm 100% R&D. No, you're not. You're getting paid for 40 hours, your percentage of time over all time is 50%, you can claim 50%. You can't make that argument. You're not getting paid for 80 hours, okay?
How do you determine your hourly rate then?
Well, it's what depends on what you pay yourself on the PAYG. Or contractor.
If you've got a full-time day job,
Yeah.
you're doing this on the side.
Well, you've got to look at the tax rate. Is it worthwhile paying yourself more money and pushing yourself up to the tax rate? It's your personal tax rate versus getting 45 cents back.
So they combine them.
Well, yeah, if you've got a job and you're already earning 100 grand a year, and then you pay yourself another 40 grand from the R&D company, what tax rate are you on? That 40 grand would be on a high tax rate, whereby it would be almost negligible versus getting 45. So I'm talking about paying yourself if you don't have any other income. You're working for your new R&D company, you don't have any other form of taxable income. Or you've got a very low one. You know what I mean?
Yeah.
People can pay themselves $18,200 a year without paying any tax. They can claim that, you know, they get 45 back and they're 9 grand better off. If they don't do that, they're getting nothing from the government. So why wouldn't you do it? I mean, you should be valuing your time anyway, and if you want to loan the net proceeds of the net wage back, which most founders do anyway, well, so be it. But this is the way of getting something out of the program. Yeah.
The prepayment solution that you serve up, which is of course very interesting for a lot of companies in various stages. Just talk me through how you set this up, because obviously you are now taking a certain amount of risk here.
Yeah.
How do you go about the process of, because you do your own little investigation and audit, and, and also the fee structure, which is about 20%, you said? Or is
No, it's not. We just only prepay the 80. When the rest comes in, we give you the balance back after our interest and the fees for doing the claim. So there's always money left over in the 20%, which you'll get back at the end as well. Okay. We just don't want to prepay the whole 100% to give it a bit of leeway in case something goes wrong in the calculation or whatever. The same as if you factor invoices, you never get 100%, you get 80, 85, you know what I mean? Same sort of. But look, what we do is we basically look at the eligibility of the project, the 4 pillars of eligibility. Are you eligible to get an R&D tax incentive? If the company's large enough and there's a bit of money at stake, we lodge an advanced finding application, which means that the government, if it all comes through nicely, we get a positive advanced finding, which is a legally binding document, which makes the R&D project eligible for a 2 or 3 year period. So therefore, we know we've got eligibility, we know we've got eligible expenditure linked to those activities. You've spent the money, it's in your zero accounts or your MYOB or whatever system you're using. And we're at the end of February now, we're 8 months into a financial year. We've seen you spend 200 grand on R&D. You're going to we'll check the ADO portal that you don't owe the ADO any money, which they're going to net off from at the end. We enter into a loan agreement document. It's based on the security of the company and the benefit. There's no personal guarantees, and we take a PPSR charge over the company. In other words, we become the bank. In other words, we'll own the tax return even if you go into administration as a worst case scenario. But we'll only give it to companies that are in growth stage. We're not a lender of last resort. We're a responsible lender. So we take it on the quality of the people that we meet. We've got a lot to do with it, the quality of the management team, the quality of the contemporaneous records that they keep. In other words, how good are they at running a business, and eligibility and so forth, and the charges. The money from the ATO gets put into our account, so our trust account goes on the ATO return. So the refund gets paid into our account. We sweep out the principal, interest and claim fees and give you the balance back, and it starts all over again. And you can do it every year. You can just you can also do the same with the EMDG check. There's no reason why we can't factor an EMDG grant. It's an entitlement program. If you're doing the activities and you're spending the money and we can see what that is and we're doing the claims and all the rest of it, again, we can give you a prepayment towards it. Yeah. Any other questions?
Thank you very much.
Okay, thank you.